Good afternoon, everyone. It's Brian Caprice from Keep Trading Simple, and welcome to this week's Nadex's weekly market analysis. Glad that you guys are back with us again. Again, week after week, we keep chugging through. I can't believe I'm saying that it's April 6th. It's like, wait, what? It was just March yesterday, and March just flew by. I don't know if it was the same for everybody else, but I don't know. It was one of those weird things where we had like 80-degree weather, then it was 33, then like 70 again. So maybe that's what kind of confused me, and I can't remember really what happened in March. But we're here. It's April. We're cruising through. Next thing you know, we'll be talking about summer vacations here. I feel like it's around the corner in the blink of an eye. So with that said, let's go ahead and jump into things today. We do have a fair amount of stuff to cover. Not the biggest news weeks, but there is some big speeches and things like that. And the way the markets have been reacting the last, I don't know, day, maybe 2-3 days, really, as far as the markets go, it's a lot of retracement. A lot of, if you guys have heard me call things parabolic moves, there's been a lot of parabolic retracements that have been bouncing around. So we'll make sure we cover those. For those of you that don't know me, I believe many of you guys do, but for those of you that are new, I know we do have every week we have more and more new people coming in. And for those of you that don't know, Todd is in the background. If you guys have any questions or I cover something a little bit too quickly and you wanted clarification on it, you guys can go ahead and type questions in the chat. And Todd is in the background and he can answer questions and give you guys clarifications. He's been doing this with me long enough now that he's starting to speak like me, not with my East Coast accent because he's from Chicago, but you know, I believe he's starting to go with the thinner pizzas now instead of the deep dish, if you guys know what I mean. Anyway, for those, again, if you don't know who I am, President and CEO of Keep Trading Simple. I have a very different trading style than a lot of the supposed experts out there. I don't claim that I am the end-all, be-all, that I know everything out there, but I just know, for me what works, and hopefully I can help teach you guys something that you didn't know before. I've been doing this since about 2000, that 1999, 2000 tech bubble is when I first got involved. I am not a 12th generation trader. My dad's dad, was not on the original trading floor. Now, my dad worked for IBM. He was a programmer. He was a ones and zeros type guy. But I'd always been drawn towards the markets. Back when I started, I basically had books. We didn't have things like the internet, right? The tech bubble was just starting. I went to seminars. I found a couple different mentors here and there, and spent a lot of years learning what not to do. And learning the traditional way, stocks, traditional options. Found currencies about 6 years into it. Learned to trade futures. I became a financial advisor, worked on the inside for a little bit. I thought that would take my trading to the next level until I got in, passed, scored very high on all my exams, got in there and realized that advisors, that's not what they do. They don't analyze charts. They're not advising you what to buy. They're just salespeople. And I feel like I could do more good on the outside. So I left, came back out, and I teach now. So create a number of different strategies. A lot of the strategies that I do teach can be used in multiple asset classes. I get that question a lot, like, oh, are you just a currencies trader? No, I mean, I can trade everything. I obviously have wealth accounts that I do, stocks and traditional options in. Nadex is one of the things that I trade, and I absolutely love trading it. I love the idea of options in general, just with the predefined risk getting into trades. Know how to trade, know how to trade stocks, obviously, but it's not necessarily my favorite. I love using leverage, hence which drew me over towards the currency realm. And then futures, I know how to trade futures. I don't think they're the best end all. I think there are other things out there that in my eyes are a little bit better. But again, so what I teach is basically chart analysis. I do price action. So if you guys have ever heard the terminology price action, I'm not an indicators based guy. I don't have 27 different indicators up there with the latest and greatest combination for this week. I don't do that. I'm basically a supply and demand price action trader. So I look at things, you guys will see a lot of boxes, a lot of horizontal boxes where I buy and sell areas. So I try to keep things as simple as possible. So if you have questions about something, go ahead and type it in. Todd most likely will answer. And if not, I can answer it for you as well. But a lot of my strategies are Nadex based because I'm doing these presentations for Nadex. All right. This is the family. I'm only going to be able to use this one for probably another, 7 months. My wife and I are expecting the second marriage, obviously, but second one is on the way. 13 weeks, 3 days. Got our ultrasound just about an hour ago. Everything completely healthy. Everything looks good. Actually, is a little bit bigger or a little bit farther ahead of the curve. So maybe it's going to be an earlier October baby this year. But we're pretty excited about that as well. So, got to say, I just got out of the appointment a little while ago, so pretty excited about that one. Cannot reveal the gender yet. My wife would kill me. But I'm pretty happy. I'm pretty excited. So before we talk about charts and making money, though, we do need to cover this Nadex risk disclaimer. And you guys have heard this before, but in case you didn't know, trading on Nadex involves risk and may not be appropriate for everyone. Members risk losing the cost at the end of their transaction, including fees. You should carefully consider whether trading on Nadex is appropriate for you in light of your investment experience and financial resources. Any trading decisions you make are solely your responsibility and your own risk. Past performance is not necessarily indicative of future results. None of the material presented herein is to be construed as a solicitation, recommendation, or offer to buy or sell any financial instrument on Nadex or elsewhere. Nadex is subject to U.S. regulatory oversight by the CFTC, and Nadex is a registered trademark of the IG Group. All right, so let's dive right into things. Okay, I have a couple different monitors up here when I stream, and then I have people will message me on another one of the platforms like, hey, you forgot to change the slide. So I see somebody typing already. First things first, let's cover the upcoming news events for the week. If you guys didn't know, I kind of leave this out of the intro, but I absolutely love news trading. I think it's the absolute best thing to do, whether you're new or experienced. I know that's the exact opposite of what everybody out there tells you to do. Like, no, that's too dangerous. You don't want to do that. But there's so much movement. There's so much, I don't know, there's so many pros to news trading. And again, I feel like that's something that everybody should learn how to do. Then we'll dive into the U.S. indices. We'll see what we have going on there. Then we'll cover Forex, kind of see what's moving. There's been a lot of movement in that market. The euro has finally got a little bit of assistance, so there's been some pretty good opportunities. And then if you attend our morning sessions, if you guys didn't know, if you're not on those sessions, every single morning from 8:45 to 9 a.m. Eastern, we do a live broadcast to look for kind of some of the top opportunities for the day. Yesterday we mentioned it. Oil was one of them. Another one was the Aussie, and some amazing play off those. So again, we'll cover that. And then last but not least, we'll cover commodities. When I say commodities, I'm not going to run into everything. I know there's other things that Nadex does, but I try to keep it as simple as possible. So we're going to say with gold, oil, and silver. I know that you can do natural gas and some of the grains out there as well, but we're just going to stay with those big three. Todd will appreciate that one too. Todd, I just want to let you know that Ernest out there just typed to me in our other chat that no flammable things around gender reveal, please. So I guess it is a thing. I haven't seen it, but I guess it is a thing that people are getting into problems with gender reveals. Anyway, we love to have a good time here. Whoops, we're supposed to go from this one to this one right there. All right, so right now, you guys will see I'm on Forex Factory. I also have Daily FX up here as well that we highlighted this morning that we talked about. I use both. Forex Factory is easy for me to get kind of the overlay. I think it's a little bit, there's a lot more kind of right there without having to drop into different menus. But right now, I would say that for the most part, I mean, with there being no news, there was Australian data early morning at 12:30 a.m., which I said, hey, listen, this could be a great setup. You can see that this one is retraced. So the setup is obviously done at this point. But for the most part, the only thing else moving right now is the pound. You can see a little bit of euro movement, but again, euro pound being up 65 is actually more than one daily ATR, so that's a lot of movement. And then again, you can see that, hey, the pound dollar as well as the pound yen are two of the bigger outliners here. And a lot of that has to do with some of the information down here about the EU, recovery fund, their legal basis, them going after, the UK. Couple different headlines out there for it. And again, I think this is just temporary. I think this is just the kind of the gut feeling kind of move, right? I do think these will retrace because I think that the UK is in a much better situation overall than the European Union is with COVID. Going into tomorrow, okay, so tomorrow is actually a day that is a decent move, right? We have some CAD data early in the morning, and again, you may or may not be a CAD trader. Then we have crude oil coming in at 10:30. Now, crude oil has been, I say it every week, but for the last 2 months now, we've had a lot of oil movement. A lot of it, though, is centered around the UK Open. Now, I know it's not feasible for everybody to trade the UK Open. It is in the morning. It is early. It is harder to do. But there's just been so much movement. And a lot of these charts we look at, you'll see that a lot of the movement initiated around 3 o'clock in the morning when that UK Open happens. I will say, a lot of people are like, listen, I want to be serious about trading. I want to, how do I find the best times? And it's kind of, it's kind of one of those things. Everybody has to make up their mind when the best time for them to trade is going to be. I know with, having to take care of 3 little ones right now, when I trade the UK Open, it's very difficult to function and take care of everybody else during the rest of the day. Your situation is probably different than mine, but if you can do it, if I wasn't married, I didn't have kids, I would be trading the UK Open every single morning because the best opportunities are taking off of that one. When my little ones grow up a little bit and they don't need as much help in the mornings, then yeah, I will probably go back to trading the UK Open. I can do it now, but after about a week, 2 weeks, I can definitely feel like I'm getting run down from it. So much opportunity there, right? Crude oil is also another one. We've had so much opportunity, but again, it's been starting early. And then tomorrow we have FOMC, so this is probably going to lead to a little bit of a stagnant market before FOMC meeting notes. That's going to be kind of FOMC is always one of those big ones we need to watch out for. All right. Now we are seeing a lot of news out there. You're seeing Yellen over here, in this week's IMF and World Banking meetings. Janet wants to tax everybody. She wants the world to be taxed so we can start doing things. Obviously, the world can't agree on how we handle many different things out there. I'm not sure how we're going to agree on taxing everybody to make it a more fair situation. Yeah. So yeah, just keep an eye on that one. But I think FOMC again will get it back on back onto the Fed side. We'll kind of hear how they're seeing recovery. Remember, some of the things that we've heard from Powell have been that they want to see, and this is a kind of a quote, they want to see actual inflation, not forecasted inflation. And again, as soon as we start seeing actual, there's going to be some moves around, particularly in the gold market. Now, looking into Thursday, all right, Thursday, Powell is speaking kind of a follow-up to the FOMC meeting notes the day before. There's probably going to be some fireworks around that. Like I said, right now, they're still kind of bantering between him and Yellen about who's in control and what process we're going to use. But again, whenever Powell speaks, there's the opportunity for major movement. Doesn't guarantee anything, but there's opportunity for immense amounts of movement based off of something he says, particularly because what is Powell in charge of? Powell is basically in charge of raising interest rates, okay? Now, when you raise interest rates, and again, if you're not familiar with this, raising interest rates is going to do a couple things, right? It's going to make borrowing more expensive. So again, the housing market's going to slow down because people don't want to deal with more expensive mortgages, right? It typically starts to hurt the overall stock market because borrowing is more expensive, right? It tends to strengthen the dollar, making it stronger, which also hurts exports as well, all right? Now, that's the way that you basically combat it. And again, you raise interest rates to combat inflation. You start kind of putting all these other things in. So it's not considered the most pro-business thing in the world to do, right? But right now with some of the things we've seen, it's not necessarily the most pro-business environment. But that's Thursday. Friday, we have really no U.S. data. Like I said, it's kind of a shy week, but there is CAD employment change and employment rate. We saw our numbers come in from non-farm last week, and they blew it out of the water. So if our neighbors to the north can follow, this could definitely give us a pretty nice day in the dollar CAD. And if we do see a strengthening CAD and a weakening dollar, that could also give us another feel-good Friday, kind of a push higher, So, again, you may not be trading currencies, but the effect that it has on the dollar will also carry over into kind of what the stock indices do for the day. All right. So that's it. Like I said, I mean, I can click even if I click yesterday and go for the week, you can see this is a pretty shy week as far as news goes. All right. I would say the biggest ones to watch out for, like I said, this was the one that I was really looking for. There's some great movement off of it last night. Crude oil, I think, should be a good one. I think FOMC and Fed Powell speaking, I think both of those are they can provide some catalysts, but like I said, it's not a pack week where we have services and durable goods and retail sales, and we don't have all those kind of fun little news releases this week. And again, it's the first week. It's it's a very popular vacation week. Volumes are lower this week. Many people are taking spring break, so not necessarily surprising. All right, so let's go across and let's start with some of the indices. All right, so the indice data I'm using is delayed by, I think, 10 minutes? It's by 10 minutes. Yeah, it's delayed slightly. I don't have this live and dialed in. Like I said, I'm not trading futures on this platform. And one of the things I dislike about futures is the fact that you have to pay for data because the exchange wants some money to be able to send that data out. It's delayed 10 minutes. I'm fine with that. I don't need it for the analysis, right? Anyway, back to the S&P. So as you can see with the S&P is we're quite high, right? I mean, there's nothing even remotely close up here. And one of the ways that I do my trading is I'm looking for tops and bottoms in the market, right? Now, there was a great entry this morning. And again, remember, for the ES, NQ, and YM, I typically recommend that you guys drop down to 15-minute charts and look to trade the morning hours, the open, okay? Doesn't mean there's not other trading opportunities throughout the day, but typically the biggest bit of movements is right around the open time frame. as well as potential reversals around 10. So you can see that right here, 930 is where the price took off, coming from its base in the overnight. Now, it missed kind of this entry here, but we could have actually refined it a little bit down here. I would say right now, I mean, we really don't have a lot of information up top. We don't really have a whole lot to go with. We're going to put this right there. I would say with everything out there, with a lack of news, again, I said it the other day, when we were over here, we were pulling back. This is one of those opportunities. I mean, again, there was a pullback here that you guys could have grabbed as well, right? We're really looking for places and areas where there's been, well-defined basing and popping off of levels to find new places to get long, right? I know it's an all-time high. It will eventually stop and turn and roll back to the downside. I mentioned if they raise interest rates, that would also stifle this. But right now, with everything going on, I mean, every governor is advancing the dates forward. Like, oh, everybody will have it. Every adult over the age of 30 is going to have the ability to have a COVID vaccine supposedly by the 19th. I know Maryland, we've had webinars, or not webinars, but I guess broadcasts. They go to YouTube. The last 2 days about how more and more people can get it. My wife just got hers. She's 30 years old. She just got registered for her first shot. So it's out there. It's going. I mean, this is recovery. Right now, we don't really know much more. This last big pop and the last big move was because of all the spending that the infrastructure recovery, the $2 trillion. But I will say the market reacted in a positive fashion to the top side because, again, this is a lot of spending, right? But they didn't look at the long-term implications of it yet, so it hadn't reacted to some of the negatives in there. One of those is being how it was going to be paid for. It was a very kind of anti-business type tax raise. Now we're actually hearing Democrats say, yeah, I'm not going to sign on for the 28. That doesn't work for me. It needs to be lower than that. We're not going to put American companies at a disadvantage to overseas companies. So it doesn't look like the 2.2 trillion or 2.1 trillion is going to be what the final number is. I know the West Virginia senator has said that as well. So we got all the booms. We didn't get any of the bust out of the cycle yet. And again, I think that will help kind of keep the market high. So, I would say look for decent levels of pullback. I'd say right now, this is one, and again, it's on a small chart, but this, 4057 area. I mean, we had some basing in here. We pulled back, we popped, we hit it, we tested. It just shows us that in two different places here, right? Shows us that here and here, right? We had buyers step in that wanted to raise this price higher. So at least that gives us one area. We have a couple lower here as well. And again, you can see we use this as far as the base goes. But the way to play this one is really dial it down to a 15-minute. Start looking around the 8 o'clock time frame in the morning. Look to see where your levels of basing were previously. And again, this one, and the reason I use this was formed at the European Open. This is when the market day started happening. And you can see that we had a decent level of basing and a test of it. If you look at some of the other big moves, this is about 8 o'clock in the morning. There was a base here at 9:15 and then took off. It touched the level here around the European Open. This pop here happened at the U.S. Open around 8:30, right around the news time, right? So you're seeing a lot of the big bits of movement when it starts to really pick up steam. And again, here's 9:30, right where my cursor is now. That's the U.S. That's the morning hours until about 10:30, and then it kind of starts to kind of chop sideways. So it's easy to pinpoint when the movement is going to happen. What you need to do is dive down to a 15-minute chart, look to see, around 8 o'clock, look to see where these 15-minute levels are and get it longer. But I would say overall for the week, I expect this to go higher. Unless we get some type of earth-shattering news out there, I would say, again, look to see if this one can set up. And, again, I would say end the week on a feel-good Friday. But tune in each morning and we'll see if we can pull some new levels on for you. NQ, kind of the same thing. Here's the open for today. I don't know if you guys can see it. I'll make it big enough so you can see the wicks on this one, right? Here's the wick. Look at the very, very bottom of the screen. Down here, 9:30 in the morning. What did it do? It pulled back to a 15-minute level of basing. It had already been tested. It originally formed at 4 o'clock this morning, came back, touched, popped, boom, came down just in time to grab those orders, and then took off and is off to the races. And again, not at all-time highs, right? We're not at an all-time high in this one. We got, I guess I can do this one. You can see that there's a lot more. We're sitting right here right now. We got a lot more room up here before we hit these all-time highs. So the NQ is really the only one that I'd be somewhat okay with it, taking some shorts out of it. Let's see, I want to move this over. Unfortunately, where we are, I mean, there's a little level sitting up in here. I would say that the next time we have really something that's briefly tested would be something along these lines up in there. There's a minor level. Let's see if I can drop this down on a 30 and see if I can find it. Not really. I mean, it's okay. The red is hot above the green, so it's not my favorite of levels, but I would say here's two potential little hiccups. Yeah, there's two potential hiccups. We'll move this one just a little bit right there. Deal with that. So yeah, there's two potential little hiccups. And again, after a strong day up again, it's already starting to pull back a little bit, but it's lunchtime. But if we get up to the 677 to 13, or the little, I guess the 13,700 range, we could have some, profit taking come in and kind of roll this back down again. I think a little bit better of a level would be the 13,737 or the 13,758 for a roll to the downside. All right. So I think either of those two is decent. And again, this is one level we could take, but I also think this level much, much lower is a better takeoff point. And again, we're looking for that Harry Potter there. For the YM, again, YM much choppier, right? Much choppier back and forth. This one kind of has a top put in here. And again, this is kind of, for lack of a better word, this is infrastructure. What do you mean we're not going to do the big thing? Wait, hold on. Wait, what are we going to do? This is what you tend to get. This is that kind of indecision back and forth. But we originally talked about when this finally put the top in, look for somewhat of a rollover, and it did, right? If we bring it down to a 15, kind of had a big area, and it really just started the base and kind of go down. I would say grabbing this when it came through the black line. We were talking about it basing in that level, and it kind of did. Is it the cleanest entry? Nah, but you're not always going to grab the cleanest ones in there. Right now, I would say we're kind of consolidated in, right? I mean, if we kind of take this, we can kind of say, hey, listen, we got kind of this little bit here, right? Kind of in here, right? But on the same side, on the flip side, we could also say, hey, listen, we kind of got this here as well, and we're kind of consolidating it in, right? The lows, and the tops are kind of starting to come down a bit, and we're just moving sideways through it. But I would say I feel the same way about the Dow. I think with decent FOMC statements, if we can maintain that that dovish look tomorrow, as long as we don't get aggressive starting to see inflation or anything like that, I do believe the Dow will be a runner to the top side tomorrow. But like I said, if we hear anything, and I say anything, about raising interest rates, seeing inflation, the economy is doing better than expected, those are not necessarily positive factors, even though you would assume so, because it means they're going to look at raising interest rates faster. Okay. And again, raising interest rates does not help the Dow whatsoever. So right now, as choppy as this is, there's really not a whole lot we can analyze and say, oh, you should do this or buy or sell in here. There's been some small stuff, but for the most part, again, 8:15 in the morning, go ahead and jump down and check this one out. All right. Let's go across and let's cover the Aussie. So yesterday morning, all right, during my session, I talked about a level being up here, the 76.57. And I drew this saying, yeah, I'd like to hit this area. I want this to push down. Make sure you get your profit before this level. It basically did exactly what we talked about. It kind of went down, gave them another entry here, came all the way down, grabbed the profit target, rolled from this level here, and went right back up. So we're at the same level right now, right? I would say, if I extended this across here, okay, you can see we've had a large push up, right? This is a 15-minute chart. I can go to a 30. 30 works better, right? Here is the European Open, right? Here was the news for Australia last night. Right, came back in over in this area, came back up, grabbed it, dropped down, almost got back to this level. We missed it by just a little bit, rallied back up again. So right now we've seen dollar weakness. We've seen Aussie strength step back into the market. You can see that we're starting to have some problems in here. I don't have an entry right now, but I would say, hey, listen, we are sitting in the upper third, right? Now, this is a level that this is technically, I guess it's technically hit number 4, right? We have 1, 2, this counts as 3, this would be 4. So we would actually expect this to fail, but I would say if we can get some type of a confirmation pattern to the downside, there are a couple of different ways you could play this. You could be looking for a short. Being that it's Tuesday, you could use some of the longer, you could use a knockout in a position like this, but I would probably use my knockout level up top, not this one because it's been hit a few times. Let's see at this point, let's see, I'm gonna move this across to here. Let's see, can I refine that one at all? And again, this is a level we've talked about in the past. Let's refine this a little bit here. Move these across. All right. So while I would say, I definitely am bearish thinking at this point. We've had such a large kind of rally in price since 6 o'clock this morning. So in 6 hours, let's see, we moved about 60 pips, right? 60 pips in 6 hours. The daily ATR on this pair is what, 72. So we moved almost one entire ATR right now inside of that time frame in 6 hours. I would say start looking for some basing and look for a reversal. Whether we grab it here at 76, 56 or at 76.80, I think either of them are decent levels. May want to kind of see if we can get to the end of the day and then have the Asian session kind of roll us back forward. But I think either of these two are decent levels to look for it to come back down. All right, Aussie yen. Whoops. So Aussie yen kind of in the same situation. Now this one came down. We had levels that we were looking to get into. We're still waiting, and again, this Harry Potter is still in play. We're waiting for it to break through the 84.48. It ended up not hitting, which is fine. We're okay with that one because again, it gave us another hit at a level. We know that this level is getting even weaker at this point. But right now, we came back down. We grabbed the level on the low side. Again, you guys can see the basing level here that we tested, right? This came back. And again, you buy on the pullbacks. It pulled back in. You would have bought here and went up. And when it came back down, that same pullback level was exactly where we went long, right? The 83, 87 was an area that we were talking about. Again, we wanted to see kind of a bounce and push through. I would say right now, I'd keep kind of both these on our radar at this point, just slightly. 83, 81. I guess we could use that, but I mean, I do feel that this one is going to retrace today, but 1, 2, 3. Man, I really feel like so. I don't know as much as I like the reaction off of this right here, this candle, this level, and again, you can see it was hit here, pushed to the brink, pushed here to the brink. Originally, it got touched here, it went through here, been touched and touched and touched. So we know we got some sellers sitting just a little bit above. But I really feel like if we can get that decent level, we can get a break above. I think that Harry Potter is still good to the top side. Areas where this one can turn, I mean, I really don't see this one turning until we get a bit higher. There's a little bit right here, but this is an even top. I'm not concerned about that one. And then we have this kind of racetrack up. I mean, it really pushes us back and really into like this range right here before we have any type of a rollover opportunity. So, the way to play this one may be to continue this one long, see how we get, see what time we enter this area. How much more has it got to go? Got about 25 pips. So yeah, I could do it this afternoon. Maybe that's what we do. Maybe we see a continued Aussie push, yen weakness. So again, this goes higher. We see some basing at the end of the day. It rolls into the Asian session, and then that's where we get the turn and the flip back down again. But again, if we come up and we start basing, and when I say basing, if we start going sideways in this channel, that's where I'm going back to this. I'm looking for a break. I'm looking for a little bit of a base, a pullback, and then there's my established level of risk long. But if we just come up and touch it and start to push down again without kind of really basing in it, I would say that this is, again, that's where we're looking for a reversal to the downside. And again, that's a nice thing about Nadex. We may have different ways to take this one. Depending on the time of day when it hits, we may have some call spreads, we may have some knockouts, and we may even have a binary if we can base it around news. I will say this pair will be at risk tomorrow for FOMC because, again, gold is associated with Aussie and the yen is overall with our stock market. So it does have exposure to FOMC meeting notes tomorrow. Now, Euro pound has been straight up, right? And again, we've seen this one. We actually were talking about a level earlier today, the 85.55. We said it wasn't in the top third, which we've liked. And as you can see, it hit, it pushed back. We were sitting right here, right, for the morning session. It did touch that level and then dropped. It was only a drop of 18, but it's not a very, very large level. So it was a 1 to 2 risk to reward at that point. Obviously, you would have to move your stop loss, get yourself out of it if we came back up, and we did, and we actually broke through. So this one is continuing to grind higher. So this zone is actually out. Like I said, if you had taken this in spot currency, you would have been at a 1 to 2 risk to reward. Most likely stopped out at break even if you were one of my traders if you took it. But now we know that, again, we've hit. Now the question is, do we have room to run? And the answer is not really. You can see there's a little bit here, a little bit here, a little bit here. I would say I would watch out for this entire area. Really, from here down to kind of there is a zone we're going to have to watch out for. So the question is, we just touched and we're starting to pull back. Could this be the potential reversal we were looking for earlier? And again, were we taking too aggressive of an entry? The Aussie and UK market is officially closed, so we're not going to see too many more headlines. I would expect that we're going to probably start basing sideways now because they are officially closed. If we start getting that base and we start to push down, we could take a reversal from this level. We are approaching the top third. That's why we can see the red up here. So a way that you could play this one is, again, look for a confirmation entry. We've already seen a bit of a pullback, right? I'm going to move this over so you can see it. But look, you guys can see there's a bit of a touch and a pullback, right? If we can get and again, I typically like a little bit more of a push in there, but if we can get a pullback down and kind of a base sideways for a little bit, right? Then a pullback to here, we could also take this south. But we want to make sure that we actually enter the area just a little bit. This is kind of a little bit of a kind of a, I don't know, like a premature kind of rollback. I do feel that we will go up and again, just for potential look. And again, Todd, I don't know if you still got the microphone on or not. I don't know if there's a call spread or knockout or anything up here. I know we had one that was close earlier.
I'd have to, you know what? If you want me to jump over, I could take a quick peek, or you want to keep going on, want me to take a peek at the...
Yeah, go ahead and see if you can find it. I'll jump to the next one, see if you can find something for this one.
All right, on the euro pound, we'll take a look. Give me a second. I'll be right back at you.
Yep, somewhere around the 85, 80-ish range, between 85.70 and 85.80. Let me know if there's something up in that range. Looking at the euro yen, now you can see the euro yen is the exact opposite. Euro pound was heading straight up. Euro yen went straight down and now has really chopped since the open. We're kind of looking for this one. This yellow, this orange area was kind of where I expected price to be today, top and bottom. Here was the trade in the overnight. And again, my session, we didn't talk about this yesterday for the Nadex group. In my session, we talked about 30.50 being an area. Again, you guys can see it's in this pink upper range. We were looking for a sell. This was made off of, I believe, an hourly level. And you can see we hit this one at 6 o'clock in the morning and literally just dropped straight down to this little profit area. So since that time, it's basically just flatlined. What I would say is this is most likely good for probably one more hit. One, two, yeah, we probably got one more hit out of the area. So again, if we can get back up to 130.50 area, I think that's decent. Again, nice push off. You know, typically when you have that much movement at 6 o'clock in the morning, there's some oomph behind it. I would also say that this level down here needs to be kept on your radar as well. And this would be the 129.64. We didn't reach it today. We only literally messed with this kind of small zone here, which is more of a target, not necessarily a takeoff point. And then also keep this on your radar down south as well of 129.28. So these are all kind of big levels. And like I said, if you had traded this one, you got well past your 1 to 3 risk of reward. Either way, I would say take a confirmation bounce off these lower levels because, again, it is in that middle of the curve. It's not at the extreme range below, which is down here at the 127.55. Okay, so there's Did you get it?
I'm sorry. I was gonna say, you know, let me jump over. I'll show you what we got on the euro pound, and you can tell me what you think. But I am gonna have to take presenter back from you for 1 second.
Sure.
And I am going to, I got to make sure I'm sharing the right thing.
There you go. That looks right.
That looks right?
Yep.
Good. All right, so yeah, I was actually checking out the call spreads on the euro pound. There really wasn't anything up there, although I didn't take a look at the, there is, I mean, the call spreads are all a bit higher, but we do have a knockout. I'm going to show you the knockout that we've got that's closest on the euro pound. It's got an, it is a touch higher than what you're looking at. Now let me zoom this. Let's make this a 15-minute chart, and let's bring this in. God, it helps if I can work it. There's it's up at 80. I mean, it's up at 86.
At 86.
Yeah, I mean, it's a bit higher than what you were looking for, but your risk reward means depending upon if it got up in that range, your maximum loss if it were to poke higher and actually knock you out up at 86.08 isn't egregious. Still not pretty because it's a Delta One product. So I mean, the whole goal is you're looking for a potential rollover after this rather emotional spike up. So
yeah,
something to
maybe
look at.
A little bit far for this one, and again, that's why we also have the option of going back to binaries. So we may be looking at that one, you know, in another day.
Right. One to keep an eye on and binaries. All right, I'm going to go ahead and flip presenter back to you.
Sure. see.
Yeah, you
Waiting
got to
for
find which screen you're working on.
yeah, it's only 3, but I have yeah. The one is an ultra wide, so it's got like 2 different things on it. So it's like, is that 1 screen? Is that 2 screens? And then it's like, do I want clean? Do I not want clean? It's like, I don't care. Anyway, here I'm like, I got nothing to hide. So I would still say, guys, on the euro yen, 130.50, 129.64 is really the top and bottom right now for me. So keep an eye on both those. Euro dollar, you can see euro dollar is rallying, and we're looking for this one to go. We're waiting for kind of the bottom to be put in, and we got some levels. We have a Harry Potter much lower, but it actually pulled away from it. So that's going to be one of those ones that we leave on the charts. We set an alert, and again, we just wait. I don't know. Again, I don't know what charting platform you guys use out there, but it's something like this where you can add it to your watch list. You can add an alert down here, and then you just kind of leave that alert there, right? And again, you forget about it, you move on. All right, use technology for the way that it's supposed to be used. Right now, though, again, what I would say is actually let's go back up to a higher time frame, because a lot of people are like, well, how do you adjust for the higher time frames? I'm going to actually change this real quick and move it down to here, since that's the last time we had buyers stepping in. Lock that so we can get a better view. All right, here we go. So obviously we're still low in the curve. We were looking for buyers to step in. We were waiting for that bottom to be put in. It's in. We're off to the races back to the top side. Now on a 4-hour basis, you can see that we do actually have a kind of a hidden little level right here that we're kind of grinding through. And again, that's it's an interesting level. It's been touched. We're kind of right there. So let me dive it down. Go down to 2 hour and see if I can get the. There we go. So we still do have a little bit of room in there. Mark this off right here. Right, and that's what we're touching. I want to see. Yeah, we're doing some basing right now. So what I'm looking for, and the reason why I did this on the much larger time frame. Let me get on to an hourly real quick. I was really trying to dial this in of kind of where the buyers were stepping in. Yeah, I gotta kind of put it there. I guess I could put it there, but either really anywhere where we're at right now is kind of in there. The reason why is because I'm looking for somewhat of a retracement. All right. This is a lot of movement since about, again, 8 o'clock this morning. You can see we had a big push up about 50 pips in 4 hours. And then you can see in here, we basically just flatline. This is from the open at 9:30 right here till about, I guess, from yesterday to today, nothing. And then all of a sudden, boom, a big bit of rally. This tends to be where we have reversal. So I'm kind of looking for some type of a basing pattern to let me go short on this one. Any shorts in this position, I think you guys need to make sure that you get your profit before we hit this level, which is approximately 118.08. Again, European data had great news today, but you got to realize this is the euro dollar. We mention anything tomorrow at FOMC about that increase in interest rates or seeing inflation or anything that's going to bring dollar strength back into the market. And that's exactly where we see dollar strength coming in, and we roll these back down. And I would say right now, I mean, looking at this, I would have to say, if I had to pick profit targets, I would say there and there for any type of a euro short. It's quite a bit of distance, right? The first profit target in this one is about 42. The second one is down here at about 108. So that's quite a bit of a drop. But I will say, once we get around really down here at 117.95, again, that's just past the whole number. So there are going to be a couple little small traps there. You can see there's nothing but straight up below that. So, there's the potential in this one that if we do start to roll, we do come through this level of basing, that we try to capture an area about this big inside of Nadex. I do think that dollar strength will creep back into the market this week. Like I said, they're just throwing money. Everybody, it's like, they're making it rain at Congress right now. It's everybody, you want money too? Okay, you can get some money. And again, with non-farm being better than expected, and again, employment rate, coming back down again. We are well into recovery, but we haven't seen the inflation yet. It's forecast, but they haven't seen it. Once they see it, that's going to be a big thing for the market. And again, dollar strength, flip this back down. I will also say, and I mentioned it earlier today, that the European Union is still at risk. We talk about here. This is the World Economic Outlook on the IMF.org website. One of the things that they're talking about is where is it in here? This one gathers. No. Oh wait, is that this one? Yeah, it's this one. When they start talking about economic recoveries are diverging across countries and sectors, reflecting a variation in pandemic-induced disruptions and the extent of the policy. So it's going back to kind of what I mentioned with the fact that the European Union, because there's so many different nations involved, to different policies, different spreading, again, they're having a bit more of an issue. I do feel that this is due to start getting some negative news. It finally popped, but I don't feel that the pop is over. I saw a report earlier today talking about how they're seeing due to the variations and due to the slow rollout of vaccines, or due to the mutations, I'm sorry, not variations, the mutations, the numbers are starting to get alarming in the EU. And that's not something necessarily that you're looking for a positive, right? All this, though, is because of the news this morning of this, right? So I do feel that we are due for a retracement. Look for the base, look for a drop, profit target one, approximately right around 1800 or 118, and then the second one is going to be down here at 117.45. Value in. So we're looking for this to come a bit higher, right? We were pushing the extreme, right? We were really, really pushing the extreme. Like, just come up, just grab it, grab the 153.70. We'd love it. We want to get short this position, and it just ran out of gas, right? Literally ran out of gas. Ended up hitting, and then again, here's the European Open. Here, I'll move this down because it did not hit. There is the European Open at 3 right there. And then again, here's where we are right now. So you can see how much movement this has moved just in one session, right? We're talking about 130 pips to the downside in 6 hours. So huge movement over one ATR. I would say this one is continuing. Oh, I moved it. I didn't want to do that. Hopefully that is in the right spot. I would say right now, I would have to stay bearish this position. Looking at this, it looks like we have a level that's going to kick in right here as far as a potential area where we could reverse. There is a couple one. This one is not horrible, much lower. I mean, it's an hourly level. Let me see if I can see something decent on like a 2 or a 4. Yeah, I still like that on the 2. It's not bad on the 4. I would say that either of these two levels would be decent profit targets to the downside if you guys are already short, right? And I would say being short this position, I think you're fine. We had our base and we had our drop. It's going to continue probably on because of the yen right now. The yen is getting strength back from the overall U.S. indices. So look for this to continue to drop lower. I would say areas where I'd be willing to start looking for some type of buying pressure to step in would probably be 151-ish level, right? 151.30 would be a potential area for us to go long. Just because, again, we've had stabilization, we've had it popping, it came back down, and they continue to move. So I think this is a decent level in here. Whether or not this is the exact turning spot, I would just kind of keep that on your radar, the 151 level. Okay. Pound dollar. Pound dollar did exactly what we had talked about on Monday. We talked about a level of basing up here at 139.08. You can see we hit it. It dropped about halfway, came back up, gave us another entry, and then again, just continued to just get hammered through the floor. Right now, it's kind of in the same scenario. Like, there's been a lot of buying pressure down here. 12 o'clock in the afternoon, I don't think we're going to get a whole lot. You're already seeing some dollar strength coming back into this one, and that's with really just the lack of really any type of news. I would say that, overall, I think tomorrow, is a dollar strength-based day. Dollar's basically flat right now, 0.06. So you can see this is really just a lot of pound weakness. I'm trying to think where this would stabilize. Let's say here's one tested level right there. There's not really a good one here. This one is definitely something we can watch out for. It's been hit twice. Like, we could change this to green. I'll extend that across. Right. I think there's a decent level for buying. Right. I would say I think there's another level here that we would be looking to take some buys off of. And what I'm kind of looking for on this one is where do we go from now till FOMC notes tomorrow? I don't think, let me see. For us to drop down to that level before the UK Open would take 70 pips. That's a lot of movement in 12 hours for this pair, unless we have some type of blockbuster headline. But if we can continue to rally down with weakness and position ourselves here tomorrow morning, there could be a launch off that. So you keep that on your radar. I don't think I would not take another sell. Excuse me, I would not take another sell off 139.08. I'd wait for that one to get a little bit higher. But again, decent level. I think it'll push just through the top side and grab some levels right above. So I would say right now for me, buying and selling would occur basically in this level right here. Okay, we're smack in the middle. I would expect it to go down, but up top, down below, I think either of those two are great levels. So look out for 139.08 and 137.52. Okay. Dollar CAD. So dollar CAD did not give us the entry we were looking for. We were looking for kind of a smash through on this one. It ended up just kind of peeking its head down and using it as an area to turn off of. Again, it's in the bottom third. We expected it to go long, but we were using a level here that had been hit 3 other times before. We expected a break. I wouldn't say that this one is earth-shatteringly different. I still think that this level up here in the middle is a decent one we can watch out for, the 125.93. If we get a break of the 125.06, look for this one to continue lower, and again, probably down about 20, 30 pips to the downside. I would shoot for 124.80, right? When it comes down there, though, we do need to have a little bit of an adjustment. We need to find where the level of basing is going to be. We have not seen it yet. It could be just slightly higher, but I'd be looking for some type of a short to occur pretty much by the time we get to 125.06. Now, tomorrow, obviously, the dollar CAD is going to be affected by FOMC. So again, we got to kind of see where we are. We're a day, 25 hours early for this one. We just don't have the levels right now to be able to look for it. But if we do rally back to the top side, it only needs to move about 50 pips in a day, which it absolutely can do. But I do like the 125.93. Okay. Dollar Swiss. So dollar Swiss is moving. So yesterday we talked about 94.24 and 92.89 as being our kind of tops and bottoms. You can see we had a nice little push early in the morning, and again, this started with the UK Open. Okay, on the 30-minute, you guys can see this is how you know it's going to be a funky week, right? Here's the UK Open right here. We formed the level, came back and touched it at 6, and then just got hammered to the downside. Kind of the same thing. This was 5, 6 o'clock in the morning. I guess it really started to pick up at about 8 o'clock this morning with dollar weakness. Although we know, and again, this is kind of the example that I was kind of trying to convey to you guys earlier. The dollar index, you guys can see, is basically flat. It's down 0.06%, but yet this is a lot of movement from 8 to now. That's 60 pips. This one does not have a 60 pip ATR. Okay. Why is this moving? Well, this would be the Swiss. Okay. It's not the dollar. So if all the movement is not from the dollar, it only can come from the Swiss. And this is showing us the Swiss strength. And again, it's pairing what we see in the euro, right? That European strength out there. Will that retrace? Yes. Would it be a better retracement area here at 92.90? Yes. Are we going to get there today? Probably not, right? We need about 30 more pips. But if we can go from here down, from now till the UK Open, could this be a potential area to roll off of and then be picked up by FOMC tomorrow to punch higher? Yeah, absolutely. So interesting setup with the dollar Swiss. Dollar yen, as you can see, dollar yen, we were looking for a confirmation bounce yesterday. We were looking for a parabolic retracement move. It gave us a bit of a retracement. It didn't come all the way back, but it went all the way up again. Grab the profit target. We mentioned get your profit right here, right around 110.50. It did. It made it up to 110.53 before turning and running back to the downside. Now, if we keep that same level on our radar, again, expecting it to break, as you can see, it did break, it did pull back, it did base below. So it is kind of more set up for a short trade right now. So it's interesting that it is stalling out. But it is set for this, right? To the downside. 3 is right. Right there. Okay, so we got pretty close. Right. Got to about what? 2.5? Yeah, about 2.5 to 1 on that one off of that Harry Potter short. So at this point, I would want to see what it does in that level, see what type of basing it, we can get sideways. But I would say right now, this one, this was a short earlier this morning. Looking for it to collapse. Let me see if I can see. Yeah, came right in to grab that level. This is a choppy one. It's not like a super clean short. I would say the next really super clean is probably down here. Let's put that in right there. 109.26 to the downside. Right there. And I would probably also use, let's bring this one across, 110. Give you guys kind of this intraday curve level. Okay. So again, We're still here. We can take a short down, but once we get to the 109.26, we're looking to go long back up. 110.83 back to the downside, kind of an intraday curve level. And again, we may even want to shorten this a little bit, but again, dollar yen will definitely have some type of response to FOMC. It's one of those pairs that is linked in about 12 different ways to FOMC. So you got to keep that on your, watch out for this one tomorrow. Okay. All right. Last but not least, let's go over to oil. Now, oil. Okay. Oil, we got some craziness going on, right? So we were sitting, let's see, right here, 12. This is what, 30 minutes? We're sitting right here. And we talked about oil earlier today, right? We came down, or yesterday in the overnight, we touched all the way down here. I thought this was going to be 2 days worth of movement. We came down, touched into one, came back up, gave us the entry long. Now, earlier today, we talked about the 60.72 being a potential level. It was tested. It came up, and it only lasted about an hour and a half worth of trade. So you unfortunately hit your full profit target. There's not much we can do with it now. But we're talking about a 70, total, what was it? It was a $1.25 drop. This one has typically an average of about $1.30 to $1.60 movement worth of it, in a day. Overall, if you look at this one, here's the U.S. Open. We drove straight up into that level. We turned and rolled right back down to the exact same spot. So you may look at it and say, yeah, it's not doing a ton. Like I was, expecting to do more. No, it's just kind of wedged inside of its, it's kind of sideways movement. I would look for buyers to step in right around $59 flat. We've seen them here. They were tested again. It was a prior level that, again, it gapped over, formed the bottom, came back up, retested, and took off again. So we've actually watched this one. Guys, look, touched it here, touched it here, touched it here, touched it here, and finally drove through, came back up, base below it, came through, came up, blew through the top, grabbed these, touched it again. And it became the bottom versus became the same bottom that we had over here versus the top. So I would say 59 is definitely something we keep on our radar. We don't have, let me see if oil inventory is out for tomorrow. All right, the forecast is supposed to be lower by 2 million barrels. All right, we didn't have that earlier today. So right now, I would say that's not bad. So we push down, and again, this actually could be a UK open move and come back up into this level tomorrow. Okay. Yeah, I think 59, and then watch it up in the 61-ish range tomorrow. I think we can get to 61 tomorrow, especially with that being considered a negative number. But look for it to come down first. I think 59, 58, one of these two levels. Wait till you get this basing and you get a small hit like this coming through the top. But I think with the oil inventory report, the way that it's forecast right now, seeing with the action that we've moved today, seeing how it has responded to it, I think we look for 61 tomorrow on crude oil. Now gold's had a decent pop, right? I guess it's okay. On this 30-minute chart, you can see it's still more wicks than it is bodies. Here we had this UK kind of early push. Here's the early morning kind of pop up and down again, and now we're kind of stabilizing. Gold tomorrow we'll be watching for FOMC. Like I said, it's going to be the contrast between forecast and actual, right? The forecast and actual inflation. We're just not there right now. And like I said, this chart's pretty ugly. I can go back and we can look at this level. We talked about this being a selling level here around 1741. It's exactly where we're at right now. So I would say, as far as clean goes, let's see. I'll make this here so it's easier to bring across. Say that would be the level we're looking at right there. 1752 would be the next level where we're looking for shorts. Okay. And again, just to look at that, do a little analysis on it. You guys can see we had a base, a pull down, and a test of that level, and that's what dropped. And again, this was a profit target here at 1750. Okay, so we got a bit more room to run. We got about $7, but I do think this one will kind of be a big mover, right? You guys can see there's how it's popping off of that. Let me see something real quick. No, that's fine. Yeah, that's fine. We'll go with that one. All right, let's go to silver. So silver is entering an area right now. And it's actually starting to pull away a little bit. Let's see on a 30-minute. Let's drop down. Yeah, you guys can see it's bouncing off that level. This is a level we've mentioned a few times at 25.22. This has also been just really ugly. Again, look at this. This is like all wicks down here. There's like almost no bodies, and we get a little bit of movement, and then we just flatlined, kind of chop back and forth, chop back and forth, chop back and forth. Finally moved up, but we are hitting an area. I would say silver is kind of in a weird spot. Like I said, it's kind of I'm a light gold product at 25.22. Yeah, it's probably okay for somewhat of a short. I think that the two areas that I had marked off are 25.22, 24.30 for my tops and bottom area. I like the 24.30 a lot better than I like the 25.22. I like that this was tested once. I like that it's in the bottom third. This is kind of sitting smack in the middle of no man's land, and it's a decent level. I mean, unfortunately, the formation was not super clean. It was all this kind of chop back and forth again, but it's definitely a big area that the market is focused on, coming from 25.22 up to 25.33, that little 11-cent area. I know not as many people are out there looking at silver, but again, it's another product that Nadex offers that we have the ability to trade. Um, this was the Reddit metal, right? This is the one that everybody on Reddit said that this one was going to $100. It's only at 25. It's not even remotely close, and it's really running some issues. But it will get a little bit of a help if we start to see inflation tomorrow. If it doesn't, again, probably due for the rollover. So it's kind of really set up for this one to kind of turn from this level and kind of head back down, most likely down here into the 24.60-ish range. So about 60 cents to the downside, but not one of those ones that I'm looking at. I'm like, oh, this one's great. I love this one, right? So it's all right. All right, well, that was the last of our charts. I don't think nothing else out here. Looks like Doggy Coin is up big again today. TLT actually is having a decent move as well. Here's your 30-minute on TLT for those of you that are looking treasuries, getting a bit of a rally up. Looks like Bitcoin's getting crushed today. So dollar index is still flat. VIX looks like it's up about 3, but nothing crazy. Back up in this 18 range. I wouldn't say it's at an extreme yet. And like I said, overall, the indices are they're pulling back, but it's lunchtime. That's expected. Again, FOMC is going to be the big mover of that one tomorrow. So just be cautious with that. And again, if you're new to currencies, tomorrow may be the day to watch currencies because I feel like we're going to have some decent movement. God forbid they mention interest rates. That's all I'm hoping is they mention seeing inflation because we will get some crazy movement. All right, so with that being said, that's it for today. Mark your calendars. Next Tuesday, April 13th. If you guys are not attending the morning sessions, again, this is kind of a top-down weekly analysis looking for kind of bigger targets. Every morning we're picking out kind of what our ideal kind of opportunities are from 8:45 to 9 a.m. Make sure you guys go ahead and sign up for those and watch those. And actually, I guess it's not even signing up. Just go to YouTube, look, search for Nadex, follow Nadex's page, click the follow button, and then hit the bell notification so you'll know exactly when we go live every morning. And if you miss it, you can always watch the replay of it as well, just like this broadcast. So with that said, it is noon, or it's actually, I guess it's 1 o'clock. I'm out of here. I'll catch you guys later. Thank you again for attending, and I'll see you tomorrow morning or next week. Take care.